What's up, everybody? Good morning. What's up? What's up? What's up? What's up? Let's get ready to get going. Getting a little bit of a late start here. Morning. What's up, guys? Woo! Hello. Good morning. Good to see you guys. All right, let's get rolling. Let's get rolling. Let's get rolling. Ooh. Did it. Big week. Oh, God. Election week, man. I've traded through so many of those. I can walk you guys through election. Y'all want to know what election is like? Feel free to stick around. Maybe I'll host a trading stream that night. But let me tell you, don't trade during the election. You want to learn something from me? Hands off. Don't play when circuit breakers are a thing. Markets can. You don't want S&P going 7% against you. Fucking your life up. Trump election was the weirdest one of all. The first time around. What's up? Good morning. Yes. How's election week been for me? Oh, I don't know. Election week's pretty good, I guess. All right, let's get going. Let's get some liquidity maps up in the center. All right, resiliences are right on the fence. Nasdaq negative, S&P positive. So S&P is looking this way. Nasdaq's looking this way, kind of hovering the fence there. Let's see what we get as far as liquidity maps go. We're kind of opening flat as of yesterday. I think the market remembers that, upsetting victories tend to cause a lot of volatility. Both elections we've had in the last two terms have caused the market to rally on the onset of the election, so keep that in mind. Friends, don't forget to smash that like button. The realest trading stream on the planet. The only live trading stream where I actually show results, historic broker statements, everything. No one else does that. A bunch of weirdos and goofballs out there just selling you stuff. Well, here it's a real deal, baby. I'll show you my performance curve. I'll show you everything. Thanks for coming to the stream. I love y'all. All right. Y'all were here last week. I won the ETF October trading contest. I won. Champ. Cool. I like being the champ. Makes me feel good. All right. And at the end of the last day, I thought I was going to lose because I took a little tiny loss at the end. But I thought the YOLOs were going to come in and nuke me, but they didn't. Okay, bear short up. Okay, ready? Here's how Rocket Scooter works. Liquidity map shows me the order flow. Today, the order flow is pointing down from bear zone. Bear zone to monthly hedge. Always a reversal from here. I always will long this. That's an easy setup today. Boy, by the book. Yeah, with the election, just watch. No trade, guys. Don't even touch that. MHP 45.47 SPY on Nasdaq's 80 points run. On Nasdaq futures about a 40-point stop. We had 2-to-1 trade on that guy. Let's wait for that to tap. Resiliences are on the fence, so likely can come down. S&P, very similar boat. We don't have really anything to bounce up on the S&P. And of course, right here, when that DD ratio does come in, if it's less than half, there is reversal potential from there. Inside of here. So today will likely be an inside day, spinning top type candle. No rally going into the election, which tomorrow, you're really gonna have the market just behave in a certain, fashion and take it easy. You know how that works. By the way, you guys, going forward, I want you all, your trader funding program, use Elite Trader Funding. We're working with those guys now, and I get 50% off My coupon matches their deal basically. And when they have no deal, which is now is 50% off. So right now, use Rocket Scooter at the top. Use that. Elite Trader Funding for all your eval accounts. Use it for everything there. We love for you guys to support them, and I use our code. We get the best deal in town, by the way. So always use our code, and we'll always have the best deal. That's the deal I have with them. We will always have the best one. So we'll hook you guys up. All right, so out the door, I don't trade in this particular setup. We have, if you look at the bottom of the screen, the resilience numbers. S&P is positive, NASDAQ is negative. You get a little bit of index divergence there when I open up my alerts on the screen. So no opening move, really. I'm going to wait for the bounce in NASDAQ and take a long. That's a pretty simple setup there. Oh, easy day today. Oh, DD ratio, less than half. Boy, it's the second day in a row we've had that. Market is trying to find its way bearish, okay? So we know how this works, right? DD ratio, less than half. Does make bear zone top a viable short. S&P resilience is positive. The S&P wants to go this way. So 572, high of day. The high of day is here, and that's it. All right, so NASDAQ, waiting for a bounce in NASDAQ to pop along on monthly hedge pressure. Going to be a pretty simple setup today. NASDAQ, the opposite is true. NASDAQ has selling pressure there, selling pressure there. There's always a long scalp from there, so I'll take it right in just a second. 485 MHP is a 90% chance that this is a reversal pivot. I always take it. Friends that are here, don't forget to smash that like button. Hit it really quick. Give it some love. Show the stream some love, you guys. Right now, Rocket Scooter is doing our... And I want you guys to come to the stream every day, because what we're going to start doing is a lot more giveaways. I'm going to be doing a lot of giveaways, not just ETF, but like a lot of stuff. Like, trust me, we have this whole new thing. We did lots of contests. Oh, here we go. Here we go. Here we go. Boom, 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 boom. Here the halfway point there. I like that. I like the mods there. Let's hit it. There's some decent odds. Let's go, baby. MHP reversal. Take the bet. Halfway point to here is about to get a 40-point rip in NASDAQ, which should be good. Like I said, I'm hitting it small with just 2. So it's a $1,600 loss and $3,200 win. Oh, yeah. God, I love Rock Scooter stuff, man. Oh, it's so good. Now, hold on. Let's see if again, not going to be too... I always hold my breath on this one. MHP is a really solid reversal point, and if you do lose MHP, it's actually pretty bad. Breaking that can be really, really, really heavy on the market. So, it does not usually want to break this. Here, back to the halfway point. Here to there. Just draw with it, easier to see. Maybe some pre-election selling, so just gonna be very careful watching that one. Holding my breath. MHP res is greater than 0, so... If it crashes this, then that's the rarest of the thing. Usually does not do that. So I'm taking about $1,500 if it loses. Usually, golly, that's a quick one. Pre-election selling, sometimes the market can be a little crazy. We went 45 to hold though. Breaking is not the best thing. That's pretty quick. That one's pretty dirty. So this is the rarer thing for it to bust that. All right, let me hit it. How's the futures going? They're going. MHP breaks are rare. 90% of days under ideal conditions will close above here. End of day. So if we take some drawdown leading up into it, that's gonna be bad. Breaking 45 is not good. This is actually could create a gamma squeeze, so be very careful on this. Res less than 0 pushes us this way. So breaking through, really rare. I needed this to pop right back above. Come on. This is the tough one. Normally the bounce is a little cleaner, but we are above triple B on VIX, which is it's something we teach you guys here. You can have overshooting and pivots. There she goes. There she goes. There she goes. There she goes. Let's roll. Let's roll. Come on. Let's roll. MHP. That tap. All right. So we are right on the edge here in that cusp. This level right here is 20.3. You want the market to be below that number. So that's going to be like where you get that volatility that you don't want, those overshooting and pivots. So we were above there. We got that overshoot. It's a little scary at times, but better. So retap that. The question is, do I want to take the profit or let it attempt for a retrace? I think today I'm going to let it attempt for a retrace up to here. I'll take the risk. Two forces pushing down, one force pushing up. Let's meet it right in the middle. 47. Boys, let me tell you something. Hold on. I don't want to celebrate too soon, but let's wait. Oh! I got random chips in my desk. What the heck? Well, this is left over from Tex-Mex Thursday. I was like, something was like poking me in the side here. Like some random Tostitos. Just chillaxing. Oh my goodness. Find random chips. Let's run. Let's run it, baby. Let's run it right to the middle. 46. Let's go. Let's go. Let's go. Let's go. And that's the end of the day. When I touch it, I'm done. That's the thing. When I touch it, I'm done. Right in the middle. Done! My fucking trading day's over. All right. Any questions, ladies and gentlemen? Hi, welcome to Rocket Scooter. My name's Matt. You guys here to learn trading or what? That's it. I'm not doing anything else. The day's over. The day is over. That's it. All right, everybody. Enjoy your fucking day. Go have fun. Let me go to the gym. Well, no, I'll hang out with y'all for a couple hours. Well, let's talk about whatever. Oh, that was clean. Oh, that was clean. That's it. That's all you need to do sometimes. That's it. What do you guys want to do with your day off? It's election tomorrow. Don't overdo it. Don't overdo it. Don't even. I'm done. I literally am done. The pressure's point from here to here, here to here. I drew that to start a day. I'll teach you guys what I just did. Y'all want to learn? Do me a favor. We get the likes on the stream to like 75. Everybody go down and click that like button real quick. I'm gonna tell you guys something. I'll teach you this method. These stats on screen, I'll teach you guys this really quick. What a quickie. Oh, this is super quick. Yeah, I love days like this. That's it. ETF discount. No. So ETF is going to be 50% for a while. So I'm going to tell you guys. Use our code right now. It's 50% off now. But we get the best deals. So if you use our code no matter what, we usually match their deal when they have a big one. Actually, wait. Oh, guys, hold on. Listen. I'm going to tell you this right now. I don't know. There must be a glitch before they change it, and they may be listening. Everybody, I'm still getting like 85% off of the fast tracks, or 65% or something like that. If you click that link, apparently there's a glitch. We're still getting a discount. Is that a new promotion? That's what they're doing? Is that the new promotion? Fast tracks? Or is this a glitch? Is that today? See, this is what happens when I sleep in and I don't get up and go read what's going on. Okay. I'm still thinking they forgot, and I was like, go get some really quick before Zach Nation finds out. I'm just kidding, Jason. All right, so yeah, so apparently that's the real one. All right, so yeah, use the link. Here we go. Fast tracks. These are the good ones. $25 a pop, $26 a pop. Go for it. There you go. Fast tracks are some of the, we talked about this on Friday, like what the difference between all of them is, right? Fast track is the cheapest, but it's also the easiest to go bust on. The difference between a fast track and a static is that fast track has the trailing drawdown, and you have to beat it in a certain amount of days. And there's the trailing drawdown is kind of what gets you. But I'll teach you guys how to whip up some of them fast tracks. Now here, okay, look. Well, I did close in the middle. Customarily, that's what you're supposed to do in this kind of setup. One second. Why the middle, not next resistance? Because, correct, right? So let me talk to you about what that one means, right? Let's open up the liquidity map. And so if you guys haven't used Rocket Scooter, by the way, we're going to do a contest this week. And if you haven't signed up for our stuff, we're going to give away some free accounts just to check it out. So stay tuned this week. I'll make the announcement. Probably on Wednesday, we'll do a giveaway. And right now, we're doing a giveaway for 2 free lifetime memberships. It's $4,000 a pop. We're doing a giveaway for that as well. There's more information about that. If you subscribe to any of our stuff and leave a review, you enter that drawing. So we made the announcement late between November 3rd and 10th. If you guys check out what we do over at Rocket Scooter, sign up for our membership. 50% off the first month. You enter into a $4,000 prize. So that's going to be pretty easy for you guys to check out. All right. I'll link to just post in the stream below. So why not all the way next resistance? Well, that is kind of a resistance, right? So the idea is when you have pressures pushing down and pressures pushing up, I trade to the middle all the time, which is customarily what I like to do and trim. The next resistance could be to trade it all the way back up. Normally, I would close and hold a runner if that were the case. But here's the problem, right? Today's not a normal trading day. Tomorrow's election. And today, we crack through MHP, and VIX is right on the cusp of being very close to Triple B, which causes pivots to overshoot. And so anytime I get a caution that scares me out, I get out of the way. That's pretty much customarily what I do. So it has to be, okay, so the contest is for new members only. So people that just sign up in these 10 days. And I'm not going to lie, there's only been, since I made the announcement, like 3 people sign up. So your chances are pretty high to get a free lifetime membership to our software. But it has to be new members only. We have a whole week. No telling who'll be there at the end of the week, but $8,000 giveaway. So here's what it is, right? when you break through this level right here, this is a particular thing that we teach. The VVIX is high, and so the market can just spontaneously flip around. When I get a quick reversal like this, like normally on MHP, you'll want it to bounce right to there. Close out some, hold a runner to next resistance, and call it. And your next resistance was right there. And this is the end of the trading day. Let me see if my code is still giving 50% off everything else. Yeah, so I'm still getting 50% off. I need to say that you use code RocketScooter to get 50% off everything else, though. Okay, hold on one second. But because today, there's a lot of things that were kind of looking iffy, right? This, how's it tried to sell off here? Do you see that? See right here, it tried to sell off. There's that candle. Let me zoom in on this, right? The middle is always the main resistance. And I was only in a position of like 2, right? I wasn't even that big of a position. So had I been in like 5, I usually would have trimmed most and let 2 or 3 of them ride. But because I was in a small position already, I just trimmed the whole thing. There really wasn't much room. I could have trimmed half and left a runner. But had I trimmed half and then left the runner and then it went the other way, I probably would have made nothing. So that's kind of the idea that I think about. I didn't have a big enough position size to leave a runner on the table, really. And we were above triple B. This could have very well taken another stab, which I was waiting for it to come down again, and I could have made that trade a second time. But being before the election, you're going to see a little bit of like wonky mechanics, this week, especially today. Let me teach you guys what happened last election. Y'all want to know? I'll teach you guys what happened last year. All right, I'll teach you guys. Last election was nuts. Whoo, baby. Did y'all like that? That was quick. That was in and out. That was a quickie. That was a super simple day. All right, here's the election. This happened last time, okay? Let me clear the screen off real quick. So by the way, if it's your first day at the stream, welcome. My name's Matt. I'm the CEO of the RocketScooter Corporation, also a full-time day trader. I created this trading platform, the technique you see on the screen, and I don't shy away from trading competition. I won't lie. I'm the only person on YouTube that shows their performance statements. So you guys can learn. I'm fully transparent. You guys see what I do. I show all my trades. Every month, I'll show you the month of what I've done trading-wise. I compete in trading contests in the leaderboard, the Robbins Cup. I won the ETF trading competition. I always am super competitive about trading. And you guys will learn something if y'all stick around. So let's find 2016. Last 2 elections were like this. Get ready. I know I have my DD bands on here making it crazy. All right, here's the Trump election. You can spot that from a mile away, dude. All right, so back in the day, in the overnight pop quiz. How much overnight can the S&P and NASDAQ move up or down before circuit breaker is triggered? Last time you did something that quick, you need a cigarette afterwards. I know. I had a super quickie on that one. How much? How much now? I'm going to make sure everybody knows this because it recently changed. I should do a live trading on election night. I'm going to sit there and I'm going to make fun of anyone that's trading on election night. That's what I'm going to do. I'm going to call you guys idiots if you touch in the fucking market during election night. Okay. The answer, nobody in YouTube got it. Everybody in Zoom seemed to got it. All right. So you have 2 different things. Circuit breakers are very real during elections. Back then, it was 5%. Back then. It was 5% back then. Plus or minus in the overnight session, which means when the Globex is open, up until the stock market opens, the overnight session, the market can go up, can go down, 5%, it would stop. As of now, they've upped that to 7%. now. Back then it was 5. And then when you hit, here's what happens when you hit that circuit breaker. Okay. I'll tell you, I've been here a couple of times. Pop quiz number 2. What was the largest per minute in a single minute drop in the S&P in the history of the S&P? That's another pop quiz. Let's see if you guys know which day that was. The S&P's value moved the most in a single minute in the history of the stock market on a percent basis in your actual lifetime. No, it wasn't the flash crash, but keep guessing. Well, I shouldn't tell you the answer. Keep guessing. Single per minute drop of the S&P in the history of the stock market. No, per minute, meaning the 1 minute in a single minute, the change in a minute. It wasn't the overall drop for the day. It's in 1 minute, the S&P moved a certain value. When I show it to you, it's going to be pretty neat. I study the history of the market. All right. So how the circuit breaker works in the overnight is different than the daytime. The daytime is 7, 13, and 20% in tiers. Okay. When the market falls 7%, it's only minus, by the way, in the daytime. You can go up 1,000,000% in the market, it'll be fine. When you hit this, there's a halt. Markets will stop trading. Futures will then take over and run a little equation called the IOP. It's something the CME group invented. The IOP will recalculate where the price needs to be based on the available liquidity, and price will just jump somewhere else and resume trading. If you hit 13% again, there again will be another halt. I think the halt is 10 minutes? 15 minutes, something like that. To refresh on that, I think it's 10. You guys can tell me. At 13%, it will halt again, and it will wait. And then the IOP will calculate the number, and the market will open up again and resume trading. If you fall 20% in a single day, the day ends for everybody, and the stock market closes down. You all go home early. Wasn't a CPI. Wasn't an election. And when I show you what happened, remember what I just taught you now. It's very important. The IOP is a calculation that takes place every single day. When the Globex market closes and the Globex market opens, you may notice sometimes futures gap up. And the opening price of futures, you may not know, is actually a calculation. The CME sets the opening price. It does a calculation and sets the opening bid based on the calculation. So there's a calculation that determines when the Globex opens, where it's trading at. It's a math equation. You can calculate it yourself. Pretty neat. Okay. They have a video to teach you how to do it. In the overnight, it's slightly different. In the overnight, when the market falls or rises 7%, these days it's 7, in the Trump election, it was 5, they've upped it. When you hit that limit, something really cool happens. You guys know what the bid and ask is, right? Ask price here, bid price here. And the minute you fall 7%, something magical happens. Trading doesn't halt. Trading still resumes, but only in one direction. What you will see is all the orders in the ask start stacking up, like literally right here. But normally on a level 2, you open up the active trader. On the level 2, look, it's like 17 and 20 and 25 and 40 and 50. Okay, so using that as an example, you'll normally see 10, 20, 50, 70, 10, 20, 50, 70. Here you're going to see like 24,682 contracts trying to be sold. And then you'll see like 20 and then 10 and then 5. You'll be like, what is this ridiculous number? And this number is spazzing out. And this number says like 1 and then 4 and then 0. It just basically there's no bid. What happens here is that market orders that try to sell, if you just try to sell a market order, the Globex will reject it outright. It says order rejected. You're no longer allowed to sell to the bid when you're 7% or lower. But you can buy to the ask all day long. So you'll see volume, but price will stay exactly the same. It's an interesting, fun thing to witness. I've seen circuit breakers active multiple times in my career. I've been trading since 2010. So imagine price is like boom, circuit breaker. And all of a sudden, 3 or 4 minutes pop off. You have volume here, some volume there, and some volume there, and some volume there. Yet, the price is doing that funny thing where it's just like a little dash. No volume, some volume, no volume, some volume. Every once in a while, you'll see like a and then back down. And here you'll see like big volume spikes, and then volume again, and prices going nowhere. So there's no selling in here, only buying. So these are people that are buying, but not buying the 24,000 contracts to advance it. But as soon as you clear out the ask price, trading resumes as long as you're above 7%. But once it falls back down, it stops. So it's a neat little thing where it's like bumpers in bowling. The ball can't leave the bumper. It can go this way as much as you want to trade it, but here it just stops. Which is really neat, and it'll stay there until the stock market opens in a particular way. So overnight is really neat. In the Trump election, this is what happened. The market was trading, and all of a sudden, it hit the 5% at the time. It stayed there. It had a bump, another bump, and then it did this. And then it rallied for 4 years without ever looking back. So the stock market fell 4% and then rallied like 8% from the bottom. When market halts for the day, you're stuck with your position. Depends on which kind of halt. If it halts in the Globex session, you can buy all day long to the ask, which means you can order a long or you can cover a short, but you cannot sell a market order to the bid when you're on the downside, and you cannot buy a market order to the ask when it's on the upside in the overnight. It can only go 7% up or down and stops. You can only do one directional trading at that point. In the daytime session, you are stuck. All market orders get rejected and it halts. You can't go either direction. So let me tell you, the worst single drop in the history of the stock market took place in March 2020. The single 1 minute drop in the history of the stock market, bigger than the flash crash, bigger than anything, bigger in a single minute during COVID. It's the only time in my career that I've seen this, and the only time in my career I will ever see this. It was ridiculous. Okay, so the market was trading during COVID, and it was that big violent crash. It's like a month of trading we were in here, and then the last tail end of COVID was a day that did this, dude. It was nuts. And let me tell you what that day did. The market was falling and falling and falling, and then it hit the 7%. And then you waited during the halt. I normally take this trade every single time from here to here, but I'm done for the day. So any support off of here is along to there. Resiliences are positive. That will support that trade. But honestly, I don't want to go any higher than this, and we're back down to there. This is NASDAQ futures. Like I said, day's over for me today because it's election day tomorrow, but let me finish the story. 7% it fell, and then it waited. And then, as soon as the halt was lifted, the IOP calculated the new level, and it calculated it here at 15% lower, which triggered the 13% circuit breaker again. So the market stopped here, and then when the halt lifted like 10 minutes later, whatever, I think, isn't it 10 minutes? 10 or 15 minutes. I think it's 10 minutes. Immediately, the market went from 7% to 15% in a snap of a finger, and again, triggered the second circuit breaker with no trades being active. What you saw was the market move to here and then stop. And then you saw where the bid and ask was like, crowded around right here. And all of a sudden, when the halt lifted, is it 15 minutes? Okay, it is 15 minutes. You guys are right. Thank you. I always get that confused with the MOC and MOO order, which is 10. Okay. So the bid and ask dropped way down here where the ask price was 15% lower below the circuit breaker. So the market hit a circuit breaker and then gapped into the second one. So the market was shut down, and then it did the calculation, and then it was shut down again 15% lower. And then after the next 15 minutes, the market gapped up right here. The market fell 8% in an instant. 8% in an instant during COVID. To see one circuit breaker gap into another, the only time in your lifetime you'll ever see it. Let me tell you how many lives that fucked up. You guys ready for this? Imagine this. Remember, market orders get what? They get rejected. Market falls right to here. You longed right at the end. Boom. Stops. You have your stop right there. Okay, you got my stop loss right there. It's fine. The market opens down here, completely blasting through here. And then that's the new bid and ask. Your account value is pegged against the ask price if you're long. Because that's the price. I mean, sorry, the bid price if you're long, because that's the price you can sell it at. So say that you longed right here and it stops out and you're down $1,000. You bought like a couple of futures contracts. All of a sudden the market gaps, 500 points or something like that. That's 6% of 6,360 points. Okay, the S&P. Like $16,000-$17,000 contract. What? So imagine you're down 1,000, and all of a sudden market opens here. Your count is now down, I don't know, $62,000. Because you had like 5 contracts to YOLO at the bottom there. And all of a sudden, you look over here, and your stop loss is no longer there. And it also didn't get filled. And what you don't know what happened is that the minute that the price moves below your stop loss, it triggers your platform to fire off a market order. That's what stop loss is. It just says below this point, sell the market. The market order gets immediately rejected by the Globex. If you check your trading logs, it'll say stop triggered, order rejected, and you're still long down here and the market's right there. And you're still in your position. At that point, hands are getting sweaty. Mom's spaghetti. Knees deep, balls are sweaty, whatever. Okay, so when you think about it, you're like staring at the market, freaking out. Like, this can't be real. What? There's no way, that's a glitch. And the market opens again and happens to gap up there, and you're only down 48,000. And you're like, wait, what's going on? This can't be real. I had to stop. What the hell's going on? And all of a sudden, it's going up and going up and going up. Now, 42. Okay, maybe it is real. Maybe I'm making it back. 42, 41. All of a sudden, your broker closes your position right there. And then it rallies back to your starting point where you would have broken even. So imagine this. This happened to a lot of people. I knew a lot of people that's happened to. I train you, don't trade anywhere into those circuit breakers. This can happen. What do you think happens when you're down and it's going up and going up? Your broker closes you, and then your balance says no, you're negative $48,000, or negative 250,000, negative whatever. Oh yeah, it's margin call for sure. It's definitely a phone call from your broker. And they'll likely not wait till the end of the day. They'll likely be calling you right then, as soon as they get to you, because you and other people in that boat, they're basically going through all the phone calls. And they're going to call you, and you're going to say, oh my God, this is so crazy, guys. Hey, what just happened? That can't be real, right? And it's just like, how can that happen? I had a stop loss. And your broker will say, yeah, we understand. This happens. We apologize for the inconvenience, sir or madam. You'll be okay. What we're going to do is credit you the balance, and you're going to be absolutely fine, and nothing is going to come of this. It's a glitch in the system, and you're fine. You'll be fine. We'll start you back over. No! Here's what's going to happen. This is you. Oh my God, this is so crazy. This can't be real. Hello? What? Fuck you, pay me. Wait. Huh? No, but why are you telling me fuck you, pay me? Wait, I owe you the money in 3 days, or you're going to write me off as bad debt to credit bureau, and then I'll never be able to open a futures. Wait, hold on. Why are you being aggressive? Hey, I thought we were friends. Why are you being mean to me? This is already too hard to stomach. Hello? Hello? And that's really what happens. You ain't getting a nice phone call from your buddy up in New York. You're getting a phone call from somebody that's like from the mafia. Yo, you owe us the money. Put the money in the account. 3 days. You have 3 days to cover the call. We write you off. And that goes on your credit reports, bad debt. You in no way in future you'll ever open a futures account again. Because you want to YOLO 5 contracts right on the edge of a circuit breaker. And if you are negative in a futures account, what they do is you can't trade anymore, and you owe that money to that broker. And they all talk. And so your futures career could end if you owe money. and then you get a little blip on your credit report. They give you the whole "fuck you, pay me" phone call. They're not like, "Oh, here, coming for a warm hug. It's okay. It happens to everybody, buddy." They're like, "You should have known the rules, bruh." And they're mean. They're mean, I'm sure, because that's their money. And they're in a frenzy because they had to come up with that money to cover it in clearing. If they didn't have any rules in place to auto liquidate you to keep you from being in a position near a circuit breaker, when you trade in a circuit breaker, you will ruin your life. So don't trade when the S&P has fallen 3% or more. I don't care if that circuit breaker is 7% or 5% or 20%. 3% or more, you're going to sit out. But hey, we have a rule that's even better. When you trade outside the DD band, you're going to sit out anyways. So the DD band in our world prevents you from ever getting close to circuit breaker, does it, guys? Your broker ain't going to call you and give you a hug and pat you on the back and it's okay. We'll give you an out, you know. Sometimes your broker will give you that out if you pass your PD. If you're not a pattern day trader and you become flagged as a PDT and you don't have 25K in your account, a lot of times they'll give you like one get out of jail free card and margin account. The broker will give you like a one time, okay, we'll unlock your account, but don't let it happen again. Oh, it comes to losing money in trading. Broker is your friend while you're paying commissions, and then your broker is your worst nightmare when you owe them money, because that's their money. So we have a rule. DD band on the S&P right now is 40 points from last disclosed. We have those green bands we talk about, and outside of the DD bands, we sit out both ways. 40 points in the S&P when it's 6,000 is practically nothing. That's like 0.6%. You don't even get close to the circuit breakers when you learn how to trade the rock scooter. You know, not even a thing. You're not even touching the market that far away. Yeah, it's better to trade a cash account if you're building limits, 100%. You always should trade it's better to trade a cash account, really always, to be honest, as a day trader. Margin is not useful to day traders. I've always taught that as well. Margin is like the easiest way to send an unprofitable trader into a downward spiral, to let them trade with. Let's give a newbie that doesn't know what they're doing. Let's let them borrow against their existing money and let them trade money they don't have, because certainly, that's smart. The reason margin exists, you guys, is so brokers can make quadruple the commissions off of your trading. They loan you money and then they stop you out if you go to zero, and then they just make 4 times what they normally would have made off of your trading by loaning you more money to blow up. It's fun. So, margin is a dumb thing. It's not for I try to size my position to not be like I'm trading, in futures. I try to size my position down to where it's equivalent to a cash account. I don't trade heavy. Look, you saw me today. I mean, how much did I make today? Those spun-in accounts. 27 plus 26 plus 16. What is that? 61, 6,700 bucks in like 4 minutes. Off of 2 contracts. I didn't need it. Look at that. 2 contracts. Imagine if I would put 15 on there. You'd be up and down tens of thousands of 20s of thousands of dollars in like a 5-minute sprint. That's no thank you, right? I don't take that kind of risk. But anyways, so that March 2020, I think it's March 17th, one of those days. Circuit breaker again, and the market gapped up and resumed. But to trigger one circuit breaker to the next, for the market to hit this to level 2 without a single order being filled, the first time I've ever seen that. And it's the first time you'll ever see that. The single biggest 1-minute drop in the history of the S&P was that moment in time. I was bewildered, and I gave a whole lesson on that. And I said, stop losses won't trigger market order. If your stop loss was anywhere inside of there, you were fucked, and your account would go negative. Market falls 8%. You're very likely to blow up. I don't care what your account size is. If you got like a margined position in there, like, oh gosh, 8% now is at 480 points in the S&P at 6,000. 5,000 for every 100. So let's just round up to 500. 25,000 a contract. One contract would have lost you $25,000 off of one. You're trying to make $500 and $1,000 worth of trading. I'm going to buy the dip here and minus 25 in the hole per contract. What have you bought for? What have you bought 10? 250 grand in the hole?
Yeah. Hey, yo, fuck you, bro. Pay me.
But I don't have that money, bro. Fuck you, pay me. They sound like calling. They're gonna sound like guys that are gonna come to your house with baseball bats.
Hey, yo, Vinny, this guy don't want to pay up.
What? He don't want to pay up? You tell him we gonna break his knees?
Yeah, I told him he to break his knees.
All right, we gonna break your knees. Don't pay up. It's not like that. They don't threaten you with violence, but they give you the kind legal spiel, I bet. Well, what would likely happen is you know, just letting you know, you'll owe us. You'll have to come up with the money. Typically, what happens is we write it off as bad debt if you don't. You want to know the honest truth. And what they basically says is they go and fuck up your credit, and then you can't ever trade again. Losing 7 figures in minutes, it's crazy. Like, so yeah, don't trade anywhere close to circuit breakers. Now in the election, let's talk about that really quick, and then I'll kind of like just hang out. All right, I'm done trading Zoom. Everybody go to YouTube. Let's go. You know how it goes. No more trades today. In Zoom call, if you guys sign up for the Rocket Scooter program, Zoom call gets a head start. There's no delay on the stream. There's a delay here. You guys check us out. If you'd like to, we're doing 50% off for first month. You can check it out. 3 days, full money back. If you want to learn our system, learn our style. Honestly, my trade right now could have bought 2 lifetime accounts in those 5 minutes. Get on over there. Toodaloo. See you later. I appreciate you guys supporting the stream because honestly, it's been really fun trading with you guys. So it crashed so hard that my encoder like literally logged me out. I had to re-authenticate everything. That's so weird. All right, whatever. I'm not trading anymore today. I was like starting to close stuff down. We're back. We're back. Oh my goodness. The moment I switch over, the algo is gonna hate that move right there. Welcome back. We back. So the point I was trying to say earlier is like, don't trade during a circuit breaker. It's like ruin your life. Don't even get close. Our DD bands will keep you out of the way of that though. We're back. Hi, Algo. All right, guys, don't forget to smash the like button. Okay, let's look at this. A couple questions here. Let me show you guys some stuff. All right, so we're doing a giveaway. Let me show y'all really quick. You're not seeing our Rocket Scooter stuff. Hold on.
We hacked Wall Street. Let me show you how we did it. We created a series of tools called liquidity maps that for the first time ever reveal where large banks and major Wall Street players are in the market. Stop trying to predict price. That's random. The volume is the future. Liquidity maps are a game changer. I can plan my moves ahead of time or avoid bad days before they start. Don't believe me? I stream live every single day on YouTube, and you can watch me trade in full transparency and see me use it myself. So grab our Pro Plus trial today. Come to the Liquidity Maps Indicators full Discord access in our Trader Bootcamp course series. I will teach you everything we know so that you can learn to read the market like a pro.
I'm so cute. Look at me. Let me show you guys something. All right. Our tools on Rocket Place now. All right, so you guys, we're doing a Black Friday thing. Half price off first month. This is the software, Discord. You get our 20 and 40 days training program bootcamp. 15 different tools and indicators. We have $1,500 off a lifetime. This will last just this week only, but our Black Friday's coming early this year. And so it's as low as it'll go. Trust me, this is the lowest it'll ever be. $4,000, but up to $1,500 off. If you guys want to join lifetime, it kind of pays for itself after a while. You know, $200 a month. I mean, that's, you know, it's full access to the platform. And lifetime is all additional feature stuff we're gonna make. New things we will be making in the future. New tools, monthly subscribers will come out with like add-ons and things. It'll be a la carte. So an example is if we come up with like a new thing, there might be an add-on and it'll be like DLC. You might pay like $5 or $10 or something for future add-ons as a monthly subscriber. Not gonna be too crazy expensive, but just FYI, that is kind of like how things are gonna be with new stuff we're releasing. Lifetime, get it for free. So now we're gonna do a drawing for anybody that signs up for a monthly plan at Rocket Place. That's there. You can check out what it is we do. We have a community of almost 6,000 paid members. There's like active customers. Tons of reviews. You can read yourself. If you sign up for this right here, it's 3 days. It doesn't matter even if you ask for a refund. It doesn't matter. If you sign up for that and in 3 days you hate it, ask for a refund. If you signed up for that, in this 10-day period, you enter a drawing for 2 free lifetime memberships. Which means you can enter the drawing for free. To qualify, again, let me say, you must not have already been a customer once. You must watch at least the first 2 videos. If you ask for a refund, but you'll enter the drawing. So it's literally free. There's no downside. But you have to watch 2 videos. I'll quiz you on them. You still get your refund, but you'll to qualify for the victory. I will ask a quiz over one of the videos. A thing that you should easily know the answer if you watched it till the end. 2 free lifetime members, $4,000 pop. It's lifetime access to the platform, lifetime access to the tools, everything like that. We do Zoom calls every day at 4 p.m. Sorry, 3 p.m. Eastern. And we do training. So we go through these 20 days. It's a whole boot camp on risk management, position management, how to pick entries and exits, how to make what 7,000, 8,000, whatever today, trading just from here to here and calling it a day. Why was I so confident in that? Why am I doing anything else here? We'll talk about all of that. Gideon King, you say Price hates the trade between the 2 zones. Can you explain the mechanics and why that is? Yeah, let me do that real quick. It depends on what happens. Now, this is what we're the first kind of in retail to create something like this. And I'm a futures trader, by the way, so we use equities to create these things called liquidity maps. When I'm trading NASDAQ futures, I'm looking at a bunch of things together. NASDAQ futures and QQQ. Together, they give me the fullest picture of the NASDAQ. Okay? Whenever there's a big order, this comes through. Here's the bid, here's the ask. And ask is like 50 shares or something on it. And somebody goes in there and they want a long, like 120,000 shares. Okay. There's only 50 on the ask. The market is a way to prevent this from just that one order pushing the market that way. Typically large orders, they can overwhelm the ask plus a certain amount of tiers. There's a certain thing that happens where this order is actually sent off the books really quick. An auction between a bunch of market makers, and the exchange allows them to choose who wants to fill the order and will pay them a slightly higher fee to take that big order. The market makers will bid amongst themselves. Somebody will say, I got it. And that person will step the ask price with the amount and grab that order. So you as a trader, you won't notice any of that. You'll buy the order, a couple seconds go by and it'll get filled. A big order like that doesn't just get filled immediately. It'll take a couple seconds for that process to take over, and a dealer will jump in and buy your, get on the other side of the trade. But that's because there's like nobody, that liquidity isn't there for an order of that big. It's not that much, it's not that much selling pressure to go against it. And they're not going to let one order push the market around, right? They do that on both sides. So you as a trader, this is exactly what we exploit. You as a trader, engage in a trade against the market maker of the stock. Same way. You buy 120, whatever, I'll make a number, 120,000 shares. But you, as the trader, longed. The same plays, market maker of the stock shorted the other side of the trade. And you're buying pressure and they're against the market and they're bearish in a bull market because the traders want to buy. So they don't want to be upside down constantly across the market. They get paid fees to do this trade. They're going to buy calls to hedge against it. Short the market and buy equivalent amount of calls. That trade is neutral. So as long as they neutralize their trade every single time where they trade against you or me, you can consider these guys the casino, right? As long as they neutralize their trade by balancing this out, then they're taking no risk and just getting paid to fill orders. And so there's one more trader that's part of this equation is the market maker of the options. This person bought calls. They're the one that sold the calls. So somebody had to write those calls for them to buy them. So now you have like this strange relationship where you're trading against them, they're trading against them. And as price goes up or price goes down, this person has to buy or sell the shares themselves, the delta hedge, to neutralize, again, their risk. So market makers want to neutralize. You're buying shares. They're in the middle. They're buying or selling shares. So the middle is connecting you to them. Your shares trade is to them. Basically. Through this big roundabout method. So you got three different entities like pulling. It's like a triangle. It's like all pulling and pushing from each other. Two of them are neutral. You take the risk. And at the end of the day, there's somebody on the other side down here, another trader doing the same thing, shorting the market, random amounts, okay? And again, there's this triangular infrastructure of neutral where you have risk and you're trading against another trader down here who's shorting the market, who's also against the neutralized market making entity. So in reality, you are trading against this person with all of these pieces in the middle making this happen. Do we understand so far? All right. So to narrow it all down, you have a trader that's basically long there when there's no sellers and a trader that's basically short there where there's no buyers. You got market makers all balanced in between where both of you guys are. And what we do in that equation is we look for the market maker of the shares and the options they buy. So we get all the options flow as it comes through. We can cherry pick which options belong to that triangle. We have a way to figure it out. Created that. Because I'm a mathematician. I trade. I'm an engineer. It's an engineering degree right there. I may be like this goofball on the stream, but I'm a very accomplished mathematician, by the way. I used to run chemical reactors at a chemical plant before I went to turn to trading. At a subset reaction engineering specialty, I also taught at the University of Houston in my 20s. The dynamics and material science. So I'm a very math heavy person and I want to create things that were math heavy in the market, but I didn't want to make them hard for people to use. I want to create something that's going to just upset the market and really just have like a little more like reason to exist other than like, you know, colored lines that cross each other over. It seemed very rudimentary as a trading strategy. Okay, so here, the middle is where there's no bulls or no bears. So the trader that's long in the market, we're going to call that person a bull, okay? As long as we can identify the market maker who bought the calls, who's short against the bull, those market maker calls hint, if we can find this in the options, it just hints that there's a trader who bought when there's no sellers. We call that a bull zone. All up in here, we've identified people that long the market or want to long the market when there's nobody really selling to them. Vice versa, down here, we've identified where there's actual traders trying to short against the market when there's nobody buying from them. The market makers are smack dab in the middle, and their trades are neutral. Okay? So today, the massive amount of bears that exist in the market have now become overrun, and now bulls are in the money. In the middle, here's a neat thing. When the market opens in a bear zone, historically speaking, you click this button right here, and all of these lights are... Oh, I need to log into my futures account. I forgot. I need to take care of that. I couldn't get in my CKG account for some reason. I think I changed my password and I forgot what it was, but I'll have to figure that out today. Anyways, when all these lights are yellow and green, wherever the stock market opens, as long as they're all yellow and green, 90% of days you will close where you open. If you open in bear zone, most of the time you'll close in bear zone. Under ideal conditions, and I'll talk about that as well. Ideal conditions also require this to be pointing in the same direction. DD 0 to 0.5 is down here. Sorry, 0 to 0.49 is here. 0.5 to 1 is here. So ideal conditions. We open in bear zone, and this is bearish. 90% of days will end up down in here after it, no matter what it does here, it's back down to there. I'm not shorting it today because there's nowhere to short off of. But right here to there is a likely trade setup. It's disconnected from my futures account because it's not showing my alerts. I changed my password, and I think I've just been typing it in wrong. Okay. 10% of days close in there. When you open in bear zone, you stay in bear zone 90% of the time, which means the market is just balanced. There's like a buffer right here of like neutral. You might get some shorts squeeze out, but you're not going to get the majority of Wall Street squeezing out on a day like this. So what they're going to do is they're going to let, you know, a little bit of a bull trap. People are going to short get squeezed, and then the market's going to like trickle up, trickle up, trickle up. And at some point today, this will happen. And from here, it's kind of a toss-up what goes from there. And again, I don't trade this short because the amount of drawdown you can take, I always say, like, how high can it go? So this is not a long setup without caution, knowing that it could come right back down to there. So be careful. Why not short from hedge pressure? You can. The trade is I can short from here if DD ratio is less than half, but I always take that long. I always flip if it goes into here. I don't short up in here because I'd rather long from there to there. Even if this ratio is less than half, I always take this trade. I always say I take that trade every single time. So if it falls to here, I'm longing again. Scalp all day long through here and through here. The only time I short is I short off of here to return to some level. And if it starts squeezing into the middle, I X out every time. You saw me take that loss on Friday. I did the same trade. So again, I don't bag hold, and I made a reel that's like it's better to lose a trade than to lose an account and ultimately be right. If I'm shorting here, it's to go back down to a resistance. If it pops it exactly in the middle, I always close because I want to be long in that case. So my short on the bear zone is always tight. Now let me tell you guys that 90% rule goes both ways. It opens here, it closes there. 90% of days when everything's perfect. And this agrees. If it opens bear or opens bull, almost 0% of days will close in the middle. It almost never happens. It is never likely to happen. We never see it happen. It's the rarest of the rare. So when the market opens in the middle, let's start over here. When the S&P opens in the middle, same rules apply. 90% of days, the market closes in the middle. Let me tell you why. Because if you think about bulls that are right here, bears that are right here, tell me, what do you notice about their positions? This is my favorite lesson. This will be a quickie lesson. You're shorting down here. I'm going to short the market. This guy's like, I'm going to long up here. And then the market's in the middle. Tell me about both of those amazingly awesome traders. Probability stats are available to people that have signed up for the new Pro Plus on the new Rocketplace. Scroll up in chat, you can see it. They're both losers. Yeah. The middle, everyone's losing to the house. Everyone's losing. So if the market opens in the middle, the market makers are more likely to just hold it in the middle as much as you can or return it to the middle. If the market is balanced here, all they gotta do is keep it there, and everybody's losing. Every minute is just bleeding theta into their pockets, the ones that sold options especially. All the calls are out of the money, all the puts are out of the money, and then all of a sudden the market's just basically Nice and balanced. When the market opens bearish and presses to middle is a different story. When you push into the middle, it hates the middle. It wants to get out of the way as fast as possible. Because what happens is you're kind of like tilting the boat, and the boat is like rocking really rapidly. And it really wants to choose a side at that point because it wasn't balanced at the start of the day. The market opened bearish, and the market is trying to fight its way bearish. It's not trying to find its way to the middle. The market gapped open, and the dealers are now balanced down here. So if it breaks into the middle, it wants to push in whatever direction that track the stocks inside of it. So at the stock rate, this is the percent of market cap is bullish. If it's bearish, then inside of the middle, it wants to go back towards the bear zone. So the difference is if you open the middle, it wants to stay in the middle. If you open on either zone, it wants to choose at the end of the day what this number tells you. And we use that to our advantage. Because this ratio is less than half, I'm not longing from here on a breakout because eventually 90% of days will be back down there. So that's how I avoid taking risk right here and why I'm quickly out of the market. Okay. Probably going to do it right here while we're sitting here watching. So that's kind of what happens, right? Price hates to trade, hates to stay in the zone by the end of the day. So inside of this zone, I will long here every single time. I don't care what the lights are. If the market is great, like all the signs are good and bullish, along with a pretty heavy trade, we put it in for that. If I get the signs like here, like this market is bearish setup, I'll trade it with a smaller trade, like a medium trade. I long this every single time. I will trade this every single time it touches that bear zone and bull zone. No matter what. Open in middle, open in here, open in here. I trade that every single time. It's such a strong trade. I say mediocrity. Yeah, like I did that so many times on that contest too. This trade is my bread and butter. And while I didn't take it today because my platform is being all funky at the moment, that's one of my favorite trades. Yeah. So the neat thing is that we call these liquidity pockets, by the way, which makes a lot of sense. Bulls and bears in close proximity is a very liquid market. The opposite is true is like what they call an illiquidity pocket when it goes the other way. When you have like a bear zone on top of bull zone, it's a cooler story. It's the opposite is true. Like if you have like a zone like this and you have bear and bull. In the middle, when these two are inverted, like it's the other way around, in the middle, everybody's a winner. And the market makers are losing double. So basically like the middle is where the house is winning. But the thing is that when they squeeze one side or the other, when you open on one side or the other, the house wins even more. They trap people. This is a bull trap. House is going to squeeze out some bulls and make more money than sitting in the middle. That's why they hate the middle when you enter the middle. It's better to be on the side of the market than to be balanced. So in this particular case, an illiquidity pocket, everybody's winning in the houses. Everyone's beating the casino at that point. And the market, again, will fly from one side of the zone to the other, like the top of the zone and the bottom of the zone. And when they're this way, it's like this. When it's inverted, it's not like that. It's like that. So illiquidity pockets are wildly volatile. They go from the bottom of the zone to the top of the zone like that. So IPs are much cooler and much faster. And again, the middle is where the dealers are losing. They want to get out of the middle as fast as possible. The only time they stay in the middle is when you open in the middle, the market tends to stay there. And then if you need to like break the tie, you just kind of look at what the ratio tells you. So here, because this ratio is negative and it's likely adding to that 90% of days, I don't care what it does today. I'm not going to get trapped in that long because probability is likely going to come down. And that's how I like maintain my higher win rate because I just don't overtrade. You might say, well, it looks like the market's going up and you're going to miss out on this. I made $8,000. I don't think I'm going to miss out on anything. So I kind of sit out, right? Let it do this thing, baby. All right. We'd love to have you guys check out the platform. Like I said, if you sign up for the monthly membership, in 3 days you can ask for a refund. But if not, it enters you into a contest with free lifetime. Hold on 1 second. Okay, we'll be back at 3 o'clock today. Oh. My light turned off. Wait, does that even make a difference? I didn't even recognize this whole time my light is off. Oh, it's like slightly brighter. Okay. I was sitting here in the darkness for a little bit. Oh, Dora, thank you. Thanks for crafting me in first place. Appreciate it. So they're about to do another contest. I'm going to compete in that one too. Yeah. I'm excited. So you guys want to do a favor? This will help support the community and support our growth. If you guys, anytime you're using Elite Trader funding, use our link and our code. This is it right here. We get the best deal, period, at all times. When they're having a sale, our deal matches their deal. So when they don't have a sale, when they do have a sale, always use our code. Any revenue that we generate from that, we put it right back into the platform. That's kind of the best part. $65% off a fast track today. Oh, yeah. Yo, all right. Do I use it? Do I use a trade copier? I don't play that game. I'm different than your average, you know, I don't know, trader funding program, YouTuber, guru guy. They tend to like blow through accounts very quickly. Get 20, copy them all, trade them all like they're one. I always trade them individually because I treat it the way you're supposed to treat it. I don't spend as much money as they do on these evals. Like I'll have 20 passed, which I do right now. Have 20 passed. I'll convert like less than 5 of them to funded. I'll trade them individually. Okay, give me 1 second, guys. Hold on. Sorry. Those eggs were so good. I had eggs delivery service. Brecky. Wait. Somebody said election Trump or Kalama. That's a cool name, Kalama. Election is tomorrow. It ends tomorrow, right? Tuesday. Who am I voting for, or who do I think is gonna win? I'm not gonna tell you if that's the same thing or not. Statistically, the way as a trader, it's my job to guess the victory, despite what I want or don't want to happen. We try to remain relatively neutral here on this stream. So, because I'm going to tell you who is likely to win, it doesn't mean that I want to ostracize part of the community. And don't assume that means I support this person. Don't support, do support. I'm not going to tell you guys my position. We got to stay neutral here. Who has a higher chance of winning is Trump. Trump is likely to win. Trader, you have to look at the odds and look at the numbers. Look at the bets and look at the facts. That's not a, I want him to win or I don't want him to win. I'm not going to tell you what I want. I'm neutral here. But that's likely the outcome. As a trader, you got to think about the odds and don't think about your feelings or your wants or desires. The odds are in the favor of Trump today, this year. Yeah. So, with that being said, my bet is to bet accordingly on the market. Republican victories tend to be very decent for markets in this state coming out of recession. We remember right? You remember the last, kind of like after the flash crash and after QE3 ended, Trump's last tenure in office. It was very bullish for the market for whatever that means for you. Trump's a very volatile president as well as far as like social media is concerned. So he when you trade in Trump era, it's different than trading in Biden era. Trading in Trump era is like, I'm watching his Twitter 24/7. Is when he says something, the markets move around a lot. I don't remember any single day that the POTUS account under Biden created turmoil in the markets, and Trump is a weekly thing. So it's fun. Trading Trump's kind of fun. You don't want either one of them to win. That's funny. That's a wise choice. Politics and partnerships, relationships, anything. Yeah, so me stating the odds of what I believe will happen is not me telling you I want to, don't want to, nothing. But as a trader, you can't blind yourself to what the possibilities are. And so bet accordingly. I think both victories will be bullish for the market. I don't think either one of them will be bearish for the market. I think the market fundamentals are good enough that we're entering a bull market, period. Inflation's down, Fed's cutting rates, CPI is down, employment situation's getting better, GDP is growing. I mean, all the things that you want fundamentally are there for the market to be bullish. Consumer spending is better. Housing new starts, good. It's like when all the markets are strong, auxiliary on the side, basically it means banks are giving out credit and people are paying their bills on time, and that's when you enter a non-recession. I think we're going to get there no matter who wins the damn election. Never said hard feelings to care less who someone follows. Yeah, exactly. Like I don't care either. I live in Texas, so this is like Trump's, like Trump is very supported in my state. But I live in like a very sort of like moderate area of like Houston. So like Houston's very much more blue than it has ever been. So like in the city I live, it's like the state in general. You go to any small town in Texas and it's very much full 100% Trump out there. But here it's like 50-50, and people are actually kind of nice in Houston. I don't know. I don't see people like yelling and screaming at each other in the streets. We're like the one city where people are kind of just like, they don't really care. That's kind of nice. But I think it's because if you adopt living in Houston, you just know no matter what side you're going to take, you're going to lose to the Republican vote in Texas anyways. So it's not worth your time to fight it, so people just don't fight it. That's what I love about my city, is that people don't... It's not a city where people are, like, aggravated about it and yelling and screaming at each other in the streets. There's not a lot of picketing, not a lot of fighting. People here kind of just have that, Republicans are going to win, so... I don't know. So especially where I live in my city is very, like, kind of like... It's not so polarizing. It's just... Houston's more of, like, a melting pot than Texas in general. So it's a different environment out here. So it's like most people are like me. They just don't really care that much. Not a big deal. Tired of seeing all the political ads. The election hangs without a winner for weeks. What does the market do? The market does not going to listen to the election, other than the initial volatility. The market is already pricing in a Trump victory. This is what you have to believe, is like the market always prices in the available odds. It's called the efficient market hypothesis. So the market has been sustainably bullish, and we're trading to all-time highs into the election, which means the market's betting on a strong Republican, growth spurt. But even so, I don't think the Democrats will prevent that from happening either. I think the market by itself is going to do well. We came out of a recession in 2008, and then Obama took over, and we grew very rapidly under Obama's tenure. So it's like, I don't really think that the presidential nominee is more powerful. The winner is more powerful than the market itself's own dynamics. The reason why the Trump election was so volatile because Trump was the upsetting victor. Nobody expected him to win the first time around. And the fact that the upset thing happened, the market just goes crazy when it's upset. When the market does what it wanted to do, it doesn't really go crazy. The Biden election was a little more like muted. The market still moved pretty quickly, but yeah. But that's who I think is likely to win. But either case, a Kamala Harris victory would be an upset to the market. So that would likely be seen as more volatile than anything, but I don't think it's going to crash the market. It could, if the market is pricing a Trump victory. So you have to think like a trader, is if you believe that the market is pricing in the available odds, then the upset case causes volatility. So we could very well have a situation where if Trump wins, it dips and rips. If Kamala wins, it dips and rips. It's like the market's likely to be volatile this time around because you have two really strong polarizing candidates, and both of them seem like an upset, to be honest. You know what I mean? There's no like, the more polarizing it is, the crazier it usually is in the markets. So I have traded through enough elections to know how it goes. Let's go back to 2020. Let's go back to like November 2020. This was Biden right here. I can just spot the candles like right out the door. This is what Biden's was like. Right? And I remember it was down to like the last 3 states, right? And Biden went way up. Came right back down. And the market just kind of behaved like it didn't even happen. You guys see that? So the Biden election was a little different. The market was already moving in a direction. If you erase this wick right here, I think this is the one, right? It's like it didn't even matter. So the Trump election was here. And again, the market just doesn't really, it's like it doesn't affect, you see how the market is just kind of doing what it was already doing anyways? But the election itself creates this kind of move. Whatever you do, just don't trade that day. Don't even wake up that morning and think you're going to do something. Like, imagine if you erase this day from existence, you would have just traded normal bull markets like it didn't even happen. Treat the election like a day you want to skip. That's my advice, and it's not like, I can't give you investment advice, but I can give you advice in general on how to not be an idiot. Don't be an idiot. Don't do anything that day. Let me be the person that warns you. Don't let the market fly 3, 4, 5% away from you and then turn around and rally and think you're gonna make a ton of money. I make a ton of money when the S&P moves 10 points. When the Nasdaq moves 40 points. I was rounded up close to 10 G's today. I don't need the market to move 1,000 points to make my dreams come true in life. To live in $1 million house, to buy fancy cars. You don't need that. Don't have your brain wrapped around like big moves is big money. Small moves is big money. Consistent trading is big money. So that's how I feel. Can I tell you the office chair you have? And are you still very happy with it? Oh, I have the air on. Herman Miller. Let me find it really quick. And I don't know if this is the one I have, but I have the air on, so yeah. So like back in the day, I used to trade with like just the dumbest, cheapest, craziest trading chair. Like I just had a regular office chair with a memory foam back support on it. It was probably like a $40 chair. Because I used to have like desk chairs and I got tired of them, so I wanted something sturdy with no arms. And then I took a picture of my awesome trading setup, which by the way, you know, I've got like the best trading setup of any retail trader. If you haven't seen my shit, go to my Instagram. I'm not gonna lie, my trading setup is cool, but my chair was not cool. So everybody, when I posted my trading setup one time, was memeing me so hard because my chair was like, you know, I've got like a $20,000 computer and 8 monitors and screens and mics and all this equipment. And I've got like a Office Max, you know, green light special, 90% off, general chair that you would see in any like office building where they put fold out tables during a potluck. You got these little chairs they just put on there. Basic thing. But I bought memory foam to make it more comfortable. And they're like, why didn't you just buy a good chair? I was like, I guess I never thought of it. I never thought about it. And then Tracer Matt was watching my stream that day and he was like, bro, you got to get a Herman Miller. He's like, that's what I have. I'm like, what? Like, oh, dude, it's like the best office chair ever. So funny thing was I got on the phone with Matt and Matt was like walking me through the best. He was like, get this, get that. So you could thank Tracer Matt because he's the one that helped me design my chair. The funny story about the chair. Yeah, don't go cheap, and I'm glad I had it. I think I got it like 3 years ago, and I've loved it ever since. It's got all these supports, and everything's adjustable and whatever. But, yeah, me and Matt were on the phone, kind of like we're getting our first apartment together. So what should we get? Okay, maybe we should get the armrest. Yeah, you want an adjustable. Okay, let's get an adjustable. Okay, honey. Sounds good. It was fun, dude. He walked me through the whole thing. He's like, you want the lumbar support? You want the, you know, I was like, man, I've never knew the chairs could have this amount of functionality. And they designed it. Or I ordered it. It's nice. You get a third-party headrest for it too. Yeah, it's pretty nice. But I love it. It's like it's sturdy. It's great. You know, the other chair I used to have was like, I used to buy those leather ones from Office Depot. They were like $300 or whatever. But they were like pleather-ish. So like over time, like you would rub on it and the skin would like come off. Like it would just peel and it would always look bad. I always just throw it away and get another one. This one is like physically in the same exact shape from when I bought it. Like it looks like it's brand new. Yeah, if you want to spring $1,500 or $2,000 for an office chair after you fully deck it out, it's definitely expensive, but it is definitely worth it. Looks like they're actually, speaking of this, they're having a sale on these right now. It's that right here. So yeah, I can get for under $1,000. Yeah, mine was like $1,200. So when I put all the features on it, everything like costs a little bit more. Like it adds to the price. And I think when I decked mine out, it was like 2 G's total. But it looks like they're having a 25% off Black Friday sale, whatever. So this time to get one. Is there any chance, Felix, it can go down to 484? Yes, to 484. Probably not. 90% of days will stay on the same side of monthly hedge pressure. So the market is likely to close inside of here. The highest probability it closes is exactly here. The probability of us going here and breaking is extremely low. We don't bet on it happening today. The local reps will bring them out to your place to test drive them. Really? That's dope. Yeah, no, I love it. I finally like a big boy office furniture. You know, Herman Miller and still case at your house. Oh, nice. Did you like it? Did I only eat my eggs scrambled? I like eggs all bunch of ways, but iDoc only makes them scrambled. in the morning. She always make eggs. Me. So S&P is likely to stay in the same zone. Miscellaneous numbers have been horribly balanced right here. Well, let me refresh. Sean says your chairs are breaking you. You have them about 1.5 years. Find anything you like. Have you tried the Herman Miller? It's nice. Ever since I got it, I've been hooked. Like I said, I used to burn through like I'll show you what I used to buy. I used to buy this like what was it called? It was a Lazy Boy. Yeah, here it is. Boom. It was $300. There it is. I found it. Yeah, $300. I used to buy like, I think this is the one. Captain's chair. Yeah, $300. Something like this. I would buy like this chair. It's plush. It's fluffy. It just looked just like this. Gray and black and whatever. And then like after like a year or two, like this and this and this, from where you're like ass and elbow sweat is like rubbing on this thing, scrapes the top layer off of it. And it's just like, it's like worn pleather, and it loses its like, you know, and then it just warps, and over time you get another one. You sit in a chair for as long as I do, these things don't last. And I would just basically buy one, a couple years later, buy another, a couple years later, buy another. I keep going to the same Office Depot, getting the same chair. And now, what I got is probably gonna last like forever, so. It's how you know you have a good one is when you don't notice you have one. Like when you don't think about it and it's out of mind, it means it does its job. If you're having to think about it, then, you know, you probably get the wrong one. All right. Training's over for me right now. We went through several $200 to $300 ones, and then the wife found one at a yard sale for $50. He had it for years. There you go. That's it. Okay, chat. So today we're dealing with a kind of like a setup, the same setup we had Friday, actually. Friday did the same exact thing. You guys remember on Friday, it moved its way back down, and we end up closing down in here. This is likely the same case. The problem is I don't have anywhere to short off of, so I don't. I only short off of things, and there's nothing here. There's nothing here to short off of. So days like this, traditionally, the setup from here is I wait for it to come here, and then I trade it right back down to there. I can do this. I'll boom, boom. And then I'll close out every time because, you know, you have a 10-90 split of where that ends up at the end of the day. So who here trades Elite Trader funding? I just have a question. Have you guys used our code, the ETF? Their consistency rules are likely what's going to be what the rest of the industry ends up being close to. You guys have used our code? Yeah, add use our code. Cool. You have more than 3 paid accounts in the ETF? Yeah, you can have up to 20. That's one of the best parts. ETF and Apex are very similar. They let you have 20 accounts. My code is also 65% off right now. Actually, I'm gonna change. I keep forgetting to change the Or should be the same. Oh, 65, yeah. Theirs is 65% off of fast track, but ours is the same. Ours is the same way. Oh no, ours is only 50%. Blah. Yep, so. All right, friends. So yeah, I just looked, their discount is only for the fast tracks. Ours is for all of them. Oh yeah, so I forgot. I have a funded account from them now, like a real funded account. A live funded account that I got from winning the contest. I forgot all about it. I think I gotta get with them today to get the details on that thing. Like how much it is and all that stuff. Water. Trying out? No, because, well, either way, use my link. If you're going to still buy it from them, you guys, use my link. So don't even just use the code, just use the link. That'll still give us credit. That's the whole point. So do this. We'd love for you guys to support our group. Give us the credit for that. Use my link. I'll make sure that I make this in a thing. Even if you use their code, use my link. So, yeah. So, even if you use their code, use this link and then use their code. Either way, that gives us credit for it instead of giving them the credit for it. Just so you guys know, if you guys are buying accounts from them, whatever we make here goes right back in the trading platform. It funds future development. So for the rest of your days, use our link, even if you use their code. We'll get credit. Right here. Yeah, thank you guys. Yeah, the best accounts in ETF, there's basically like 3 schools of thought about it, right? You have like static, right? You have the end of the day drawdown. And then you have like fast track, right? Static is like medium. It's like the middle cost. End of the day is highest cost. Fast track is the cheapest. The one that costs more tends to be like more flexible. The one that costs less tends to be more rigid. That's kind of the difficulty of them. Difficulty medium. Hard. So you basically are paying for difficulty. Easy way to go about it. Static has a fixed level. No matter what you do, you blow up at one point. End of the day and fast track have drawdowns. So like fast track is as you're trading higher, your breakpoint follows you. And you can bust much quicker. You make $1 million in this account, it takes $1 million to blow it up. You make $1 million this account, it only takes what, 3,000 to blow up on the 100K basis. So the trailing drawdown is what makes it harder. That's why it's cheaper, because that busts you faster. End of the day also has a trailing drawdown, but it's pegged at the end of the day. The end of the day it fixes for the next day. And then the next day it fixes for the next day. So the drawdown trails with you day to day, but doesn't trail in real time. So your drawdown, trailing drawdown, there's none. There's end of the day, which is like it steps. This is real time, which means it follows you in real time. This is what makes it harder. This is what makes it lower. And the medium is because static is such a tight loss. So your drawdown in a static, the reason why it's not as simple as a fast track is the statics are really, really tight drawdown. Like your very first trade, it's so tight. It's so easy to go bust just on like 5 points on NASDAQ. So fast track being the cheapest and give you the more contracts and the bigger drawdown limit is what makes it more palatable to trade. You have more flexibility on your opening trade with the fast track than the static. The static, you have more flexibility on the length of the account, and it's harder at the start. Fast track, it's hard all the way throughout and easier at the start than a static. So the thing is that the difference between the main two. So end of the day drawdown is just like if you want to play the premium to give yourself the biggest amount of fat and biggest amount of padding you'll pay for the end of the day drawdown ones. So your real choice, if you don't want to pay all that money, is between these two. The start and the end is the main thing between the two of them. And there's a caveat is that a fast track has to be finished. There's a deadline. You have to finish within a certain amount of time. Static, you just have to trade min days. You have to trade at least 5 days on this one. So you have to actually trade more on this. Here, you have to beat it in a certain amount of time. 15 days, not hard to do. A static out the door, your first trade is your hardest trade because you're so close to the drawdown, even at the start. As at the end of your, like, as you tend to develop that account, your drawdown gets bigger. So static becomes easier over time. Hard at the start. And then easy if you can get out the door. Fast track is just hard. It's the same all the way throughout. But the start is easier than here. They give you a little bit more room on your first trade. So fast tracks are easier to get out the door to get your first 1 or 2 trades. Statics will like bust you on you if your first trade goes against you, you blow up. So static, you have to wait longer to execute. Make sure you're like really confident in your trade. So that's mainly the difference between them. I'll play the static. I usually have a mix of statics and fast tracks for different reasons. Whenever I have my bread and butter trades that I know I win all the time, well, almost all the time, this one right here, I hit that with statics. Like my first static trade will be this trade all day long. And then if I'm trying to take like other trades that are lower probability, I can do the fast tracks. It gives you a little more flexibility there. All right, I'm done for the day, you guys. Beautiful trades. Beautiful trades. I'm sorry. And she guys said. These are my funded fast tracks. This is tapping an eval to pass an eval. So I passed one eval on a static. These are my funded fast tracks. All right. I'll see y'all later. Yeah, about 8,000 something. All right, we're doing a giveaway. If you guys check out the monthly package over at Rocket Scooter, see the chat. Scroll below. If you sign up for the monthly, in the next 10 days, you'll enter our Black Friday drawing for a free lifetime. We're giving away 2 of them. $99 for the first month. You can take all of our courses within 3 days. You can ask for a full refund if you want. Buy it and enter the contest. Which means you can enter the contest for free. Up to 2 lifetime memberships, which is full access to our platform and everything we make forever. See you later. Killer trading day today, boys.